Hello and welcome back to the lesson. Today we are going to continue with the strategic analysis with the focus on the economic environment. The economic environment is part of the external environment. So the economic environment is another critical factor in shaping a business external environment, and it encompasses all the economic factors that can influence a company's operations, profitability, and growth potential. So understanding and analyzing the economic environment is essential for developing effective business strategies and making informed decisions. In this lesson, we are going to identify the key components of the economic environment. What are the key components of the economic environment? The first one is economic growth. Economic growth. This is the overall rate of economic growth in a country, which is a key indicator of the health of the economy. Economic growth is a key indicator of the health of the economy, and it influences consumer spending. Economic growth also influences investment levels and business confidence, such that high growth rates can present opportunities for expansion, while low or negative growth can signal economic downturns and challenges. So when analyzing the economic environment, it's important to check what is the overall economic growth. Is the economy growing, and at what rate? Is it growing positively or negatively? Is it important for a business when crafting strategy to know, so that the business can decide whether to expand its operations or not? Because if the economy is doing well, if the growth rates are high, then there could be opportunities for the business to expand. But if the economy is doing bad, if the economy is experiencing economic growth, then that can signal problems or challenges in the economy, and thereby enable the business that is carrying out strategic management to know the right thing to do during such downturns or challenges. Two, inflation. Inflation is the second component of the economic environment. Inflation is the rate at which the general level of prices of goods or services are rising. Inflation is the persistent increase in the prices of goods and services, and it erodes the purchasing power, it affects consumer behavior, and influences interest rates. So businesses need to monitor the inflation trends in order to adjust uh, um, pricing strategies and manage business costs. You understand? Inflation. Three, interest rates. Interest rates determine the cost of borrowing. Interest rates also determine the return on savings. So interest rates can be seen from two perspectives: from the one who is borrowing money, and from the point of view of the one who is investing in, say, savings account. So interest rates influence investment decisions. It also influences consumer spending and the overall cost of capital for businesses. So changes in interest rates can have a significant impact on a company's financial performance. So when analyzing the economic environment, then the strategic planners ought to consider the interest rates, the prevailing interest rates. The fourth component of the economic environment is exchange rates. Exchange rates. Exchange rates. Now, for businesses operating in international markets, exchange rates are crucial, such that fluctuations in exchange rates can affect the cost of imports, the price of exports, and the overall profitability of the company. And companies need to manage currency risk to mitigate the impact of exchange ratio volatility. You understand? Exchange rate volatility. Exchange rates. 5, unemployment. Unemployment. Now, the unemployment rate reflects the percentage of the labor force that is the jobless and actively seeking employment. You understand? The unemployment rate reflects the percentage of the labor force that is jobless and the percentage of the labor force that is jobless. The unemployment rate reflects that percentage of labor force that is jobless and actively seeking employment. There are those in the labor market who qualify to do jobs, but they may not be employed. So high unemployment can indicate a weak economy, while low unemployment can signal a strong labor market. So unemployment levels can influence wage rates. Unemployment levels can also influence the consumer spending and talent availability. So when analyzing the economic environment, then uh, the levels of unemployment ought to be considered because it has an impact on the company's operations. Because if there are many people unemployed in the economy, that means that the purchasing power of the population is low, and that affects the consumption of goods and services. All right. Then we have government fiscal and monetary policy. Fiscal and monetary policy. These are economic terms. Now, government policies relate to taxation, they relate to spending, and also interest rates. And they play a significant role in shaping the economic environment. And fiscal policies can influence aggregate demand, while monetary policies can impact interest rates and inflation. So these are 6 key components of economic environment. And candidates, the economic environment as we know it is a complex and a dynamic force that can significantly impact businesses. And by analyzing the economic environment, companies can gain valuable insights into market trends, consumer behavior, competitive dynamics, and so on. And such knowledge can help businesses develop effective strategies. Such knowledge can help businesses make informed decisions and also to navigate the challenges and opportunities that are presented by the economic landscape. So that's all for economic environment. Assignment one: what are the key economic indicators that businesses should monitor to assess the health and potential of a specific market? Two, how do macroeconomic trends such as economic cycles, global trade patterns, currency inflations impact business performance and competitiveness? Three, what strategies can businesses adopt to mitigate the risks and capitalize on opportunities presented by different economic conditions? Four, how can businesses contribute to sustainable economic development and social responsibility within their communities and their broader the broader economy? In our next lesson, we will study the social cultural environment. Bye.